Are you just starting out in real estate? Are you overwhelmed by the long list of confusing terms that you need to know? Every industry has its fair share of jargon and acronyms, and real estate is no different. That's why we have provided a comprehensive guide to get you started. So if you want to learn more about important terms to know in real estate, keep watching. Rental property refers to a type of property that the owner would rent to other people to live or work out in exchange for a monthly rent payment. Rental properties can either be commercial or residential. A short-term rental property is a property that is rented out for less than 1 year, usually days or weeks. This is also known as a vacation rental. Owning an Airbnb would be a good example. Long-term rental property, also known as a traditional rental property. This is an investment that is purchased for the purpose of renting it out to tenants for 1 year or longer. A single-family home is a property that is freestanding and not attached to any other buildings. A multi-family home is a property that can be used to house multiple families in different units that are relatively separate from each other. Examples of multi-family homes are apartments, buildings, duplexes, and triplexes. Home equity to the difference between the market value of a property you own and how much you still owe on the home loan. The overall value of the equity will grow over time as the market value of your property goes up and you continue to pay down your home loan. Rental income is the money that a landlord makes when charging a tenant for the use of the landlord's rental property. Cash flow is the amount of money that a landlord can keep for themselves at the end of every month after paying any operating or mortgage expenses. A landlord can either have a positive cash flow or a negative one. If you can spend less money than you are earning, then you will end up with a positive cash flow. However, if your expenses are higher than your income, you will have a negative cash flow. A pre-approval letter is a letter you can obtain from your bank to determine what you are able to afford before you begin your search for a property to buy. This can assure a home buyer that they will be able to get the necessary loan from the bank when they need it. In real estate, a seller's market is when the demand for buying property outweighs the supply of the properties available. This usually means that the property prices will be harder to negotiate and the buyer will have less room to ask for concessions. Alternatively, there is also a buyer's market in real estate. This is when the demand for buying a property is lower than the supply of properties for sale. This means that the sellers may be more willing to negotiate or agree to concessions. Appreciation refers to the increased market value of the property over time. This increase can happen for several reasons, including inflation, high demand, or lower supply. Predictive analytics refers to the use of historical data to predict future trends in real estate. People who invest in real estate often use this as a tool to reliably determine whether a certain property will give them a worthwhile return on their investment. Hard money loan is a loan that is based on assets and used by private investors or organizations. These loans are usually easier to get. However, they tend to have higher interest rates and short terms. Net operating income, or NOI, refers to the income that the landlord generates each year from their investment property after all the expenses have been considered. This does not include debt service. Capitalization rate, usually referred to as a cap rate, is the ratio of your net operating income from rental property compared to its current market value. This is used to calculate an investor's annual rate of return. Off-market property. A property is off-market when it's being sold without any public advertisement or acknowledgement. ROI stands for return on investment. ROI is used to evaluate the financial performance of your rental property. When you partner with us, we calculate your ROI and keep you updated through our thorough reporting. Cash flow analyzer. This is our unique tool that we can use to help you determine and forecast what your return on investment, cash flow, and cap rate will be for a specific property. This is a great way to figure out if your property will be a good investment prior to purchasing it. These are just some of the important terms that are crucial to know if you are pursuing a successful career in real estate. If you have any other questions about terms and need to know or any other aspect of property management needs, contact Service Star Realty today.